To achieve President Trump's vision of making America the crypto capital of the world, the SEC must holistically consider the potential benefits and risks of moving our markets from an off-chain environment to an on-chain one.
America's financial markets potentially moving on-chain. And again, that is in lockstep, in tandem of stablecoins and what we heard from Treasury Secretary Scott Bessent talking about stablecoins and demand for dollars moving on-chain in the arena of trillions of dollars over the next couple of years. So when you piece it all together, look, you're hearing incredible bullishness from both the Treasury Secretary and now the head of the SEC moving in lockstep. The CFTC also announcing their own sprint to deliver on some of this as well. Welcome, everybody, into another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studios here in New York City as we are watching the charts on what looks to be the beginning of a bounce back potentially here after one of the worst weeks we've had in a while. These are traditionally very tricky months in the summertime when it comes to crypto, but this looks like we've got something brewing here with a nice strong bounce back after the weekend. Showed a continuance of some of that sell-off. After, of course, Trump brought up some news, some perhaps not so comfortable flashbacks to earlier in the year when tariffs roiled macro and everything else, including crypto. But for right now, we are seeing a little bit of a boost in the market. We're going to chat whether or not that continues with one of the men behind the Treasury plays that are exploding in crypto. We're going to be chatting with the latest one built with a strategy around SWE. That one, things getting a little bit more volatile, not just Bitcoin treasuries, not just Ethereum treasuries, but also SWE treasuries to dig into, publicly traded ones, no less, to dig into later on in the show. So we'll bring you that interview in a bit. But first, we've got our rundown of topics to potentially dig through, including, of course, this recovery as well as a big, if you didn't see it last week, huge speech from new SEC chair. I don't know how many times I can call him new SEC chair when he's been there for a little bit now, but Paul Atkins was out with a pretty big speech unveiling Project Crypto as the SEC triples down on making the U.S. the crypto capital of the planet. We're going to play a little bit of what we heard from him and what it means for the markets, echoing what the president himself has said, as well as the latest trend in creator coins and what Coinage might be doing as well. Stay tuned for that as we dig through it. But want to kick off the show with not just a look at what Ethereum's doing, maybe we should also take a gander over at Bitcoin as well. Back above 115K today, as that too fought its way back, I should say, back above that level after dipping below it this weekend. And kind of two different things playing out, whether you look at Bitcoin or Ethereum right now, because on the Ethereum side, we're continuing to see this trend of what I mentioned around strategic reserves. And that, of course, being tracked by this site over here with our friend. If you see all the way at the bottom, Coinage still there, baby. 63. As people get added to this list, our 101 ETH may look humble. However, you got to keep in mind that it is the only one on here that is owned one for one by all of the members who join Coinage. But the big one, dipping back into it, was Tom Lee's Bitmine now. And I do like this battle back and forth between Bitmine and Joe Lubin's SharpLink Gaming. Basically, week for week, they go back and forth on buying ETH. And the thing that I mainly wanted to highlight was this chart here, kind of a difference of opinion when it comes to where we're at in relation to this idea of ETH versus BTC. And the big question there being, which one's going to take the cake? I don't think too much is broken down in terms of what we've seen in ETH versus Bitcoin, mostly because the question is, will it continue at its torrid pace? And I think part of the reason why the answer is yes is because you do have the huge surge really just getting underway on the Ethereum Treasury side. Meanwhile, on the Bitcoin side, you have a constant barrage of headlines. And I want to bring up one from our friend and former employee, our co-patriot here at Coinage, Andre Bagansky, writing for Decrypt, kind of spotlighting another one of these things because we are continuing to see whales come out of the woodwork and dump their Bitcoin. That's kind of the trend that's happening on the Bitcoin side of things, which I think is important to highlight when it's paired and contrasted with billions of dollars being bought on the Ethereum side. So I think that's important to highlight. And this is another one, as I said, highlighted by Andre, in another Bitcoin whale moving their Bitcoin after 12 years. It's kind of intriguing to continue to see this play out. It could just be finally taking profits. It could be a loss of, I think, this isn't talked about and people don't like talking about this in the Bitcoin community. But if you do think about how far Bitcoin's narrative has come from being kind of, decentralized money and that idea to now where it's at in terms of institutional names like BlackRock scooping up a bunch and what Saylor's doing, I think there are maybe a few people who are in the camp now that, look, not only is price up a bunch, but kind of ideologically, this space has advanced into something that is not necessarily what the people who entered back in 2014 and earlier, I think the last whale wallet we highlighted was 2011, the narrative's completely flipped. And so I don't think that that's something that should be overlooked at all when it comes to kind of where this space is going next. And we'll get into that in a second with kind of what's been playing out at the highest office, with the president now kind of leading the charge in some of this as well. Maybe our order is going to be interrupted now because we've got a guest joining in just a second. But either way, I think it's an important thing to highlight because it does kind of contrast with the firepower that still exists. And on the flip side, on that side, on the Ethereum side, I want to highlight kind of the geniusness that played out on behalf of Tom Lee and BitMine, because I think if you look at that, keep in mind the press release from today announcing that they've now come back and scooped up more Bitcoin, this time announcing that their holdings have now surpassed $2.9 billion. I think it's an important thing to mention that, let's see, I don't know what the details are in this, but again, they keep scooping up ETH with a goal of 5% of all the holdings. And that is, again, a long ways to go to get up to that level. And I think it's worth highlighting that, by the way, you had Tom Lee come out and do this move right when his stock was starting to feel the negative impacts of ETH moves lower. And what they did was they basically raised $1 billion to buy back their stock, which is not something that some of the other ETH names were doing at the same time. So I just want to highlight that it looks like Tom Lee pulled that move to avoid a complete boom and bust, which was pretty genius because he kind of saw this coming, I think, in terms of, hey, look, there might be some volatility here and we can either buy back our stock and support a complete falling off a cliff here, or we could just buy more ETH and suffer the consequences with that. And that kind of contrasts with a few of the other names that we witnessed in the past, including SharpLink. And I just want to bring up that chart in a second to contrast and show you some of the differences that makes, I think, Tom Lee who he is and how he's handling this differently, because this was the move in SharpLink. You'll notice that it's a bit more boom and busty, shall we say. And I'm not sure if boom and busty is the best term. I should come up with something else. But this is kind of what Tom avoided, what BitMine avoided here, is this complete reversal and kind of established a new line. Now, look, I mean, SharpLink is doing its own thing, but I just think that's worth highlighting in terms of some of the alchemy that Tom Lee and BitMine is pulling here to get to their 5% target of ETH in a way that might be a little bit more sustainable, using, again, the equity piece, the buyback on their shares, well-timed. Again, so props there to Tom Lee and co. on the BitMine side, because they definitely are bringing an appreciation of capital markets to the space of Ethereum, which might be separate than maybe some of these treasury companies where it comes from Web3 appreciation into capital markets. So just kind of want to highlight that as all of these different strategies play out in copying strategy. Now let's move on, though, because it's not just that that we're watching. Of course, last week, over the weekend, actually, I should say, the New York Times put out a pretty interesting story that highlights everything to do with Trump's pay for access operation. This is a pretty interesting story from David Yaffabellany over at the New York Times, digging into this repeated history of people scooping up favors or potentially ways to be highlighted by not just Trump, but also the White House and, of course, the working group, and, of course, basically, I guess, any crypto mention that might come from the powers that be in D.C., and part of that was kind of highlighting a few different projects that had made some payments to Trump's super PAC, Mega Inc., just a few weeks before that report came out. And in digging through that report from the New York Times, it was pretty interesting to look at some of the names that were included in the article and matching that with some of the names that were highlighted in the president's working group on crypto assets. I'll just bring that up here because this was the paragraph that we tweeted out here to kind of dig into, all right, who are these names? Which ones are chatted there, or charted, I should say? One of them being Ondo Finance, which, as you can see, donated more than $2 million to Mega Inc. on top of the payment to Trump's inauguration. And I'm not taking anything away from Ondo Finance. They're a new project. They're out there. People are using them, big in the real world asset space. But lo and behold, in the President Working Group's crypto presentation, you can see Ondo listed on this one as well, and some of the other names that also donated to the president's Mega Inc. super PAC. So just kind of interesting reporting from the New York Times that digs into some of potentially the pay-for-play dynamics that exist in Trump's orbit. And of course, not highlighting it on this little piece of the segment because we don't have anything to show it, but there was highlighted in that piece a lot of the pardons that potentially are being issued on the part of President Trump and how much are attached to donations also to Mega Inc. So all those things are worth highlighting, I think, and very interesting reporting coming out of the New York Times as we, as a space, think about how far we've come since the beginning of Bitcoin, and to have a president be so tied to the space. And certainly price movements, I think, it's fair to say as well. It's been interesting to see all of that playing out in real time. And a story that we'll probably circle back to. We're going to be joined shortly by someone who is also firmly in that Treasury camp that we kicked the show off of. Stephen Mackintosh is going to be joining us pretty soon. I don't know if we have him. I think we might have him. Just to this one up, in terms of backstory of all the things we've dug into, as we said, it's not just Bitcoin strategy companies anymore, and it's not just Ethereum strategy companies anymore, or Treasury plays. It's also expanded into the world of SWI and other altcoins, and I think it's a pretty fascinating development, not just because of what it means for price, but what it means for different ways to open up access ahead of, potentially, the SEC's crypto push to open up ETFs for a lot of different investors. So I want to welcome onto the show Mill City's CIO, Mackintosh, joining Coinage here with us. Stephen, it's good to see you, sir. GM.
Hey, how are you?
Doing well. Thanks for coming on, and I think it's exciting to chat about more of these treasury companies and how each one is being implemented. We were just talking a little bit ago about Tom Lee's BitMine and how he's been leading the charge for that space and bringing exposure to Wall Street and institutions. I just want to start with kind of where Mill City's push into the SWI camp came from and kind of what got you excited with this.
Yeah, sure. So hi, everyone. I'm Stephen Mackintosh, one of the co-founders of Caritage. We are a proprietary hedge fund, and we invest in crypto and deep tech. I think the first question to answer is why SWI? SWI is a blockchain that's designed to onboard the next billion users into crypto. And that comes from the founders having been hand-selected by Mark Zuckerberg at Meta to build the Libra and DM projects. As we all can see in the war for talent at the moment that's raging in AI, Zuckerberg really does find the best engineers. And these 5 founders were the best team he could assemble in crypto. And they were building a network that was designed to onboard billions of users, because that's the scale that Facebook operates. So when I first met the Miston Labs team many years ago in Palo Alto, I was struck with very high conviction that, okay, this is the team that looks like an OpenAI for crypto or a Google for crypto. So our first kind of investment thesis with my Caritage hat on is, which is the fastest horse in the race, as Raoul Pal calls it. And for us, it was very clear that SWI was going to experience exponential gains in the next few years. And I think just from a kind of a relative basis, if you look at Ethereum, it's 10 years old. I think its all-time high in terms of FDV was around 560 billion. Solana's all-time high was around 176 billion in terms of FDV. That's 5 years old on mainnet. SWI's 2 years old on mainnet, and its all-time high was around 50 billion in FDV. So if you look at what's catching up with the competitors, Sui's achieving all-time high records in terms of transactions on the chain every day. Its TVL has spiked enormously. And the overall ecosystem growth in this blockchain is incredible. So we're indexing to the growth of Sui for the next 10 years. That's why we chose Sui.
Yeah, I think, I mean, we've definitely covered Sui before and brought on both Evan and Adeni, and I was out there at Sui Base Camp out in Dubai, and there's a lot cooking in the ecosystem. I think from a capital markets perspective, I wanted to ask you more specifically kind of about how you think about the volatility that happens in a name and maybe some of these altcoins like Sui versus the Bitcoins and the Ethereums of the world, because there's an argument to be made that as you have that volatility and the ability to stake, as kind of Tom Lima is now leading the charge with Ethereum and really presenting that idea to investors. How do you look at that with Sui, and what do maybe you guys need to do differently than maybe a Bitcoin treasury company might need to do? And what does that unlock for you, I guess?
Yeah, that's a great question. I think, first of all, you've got to, tap your hat to Saylor for what he's achieved. He's quite inspirational, and he has been able to build an incredible business, which is centered around two bases that he speaks to. One base is the Bitcoiners, and he talks about, achieving one of the biggest percentages of Satoshis in the world and never selling. And I think that speaks very high to his base. The other base he speaks to is Wall Street, volatility traders who love the vol in strategy stock and the vol in the underlying asset, Bitcoin. And there's great yield to be clipped there by traders in between. In regard to how I look at the opportunity and the risks around volatility, I think there's a few things to stress that makes our Mill City Ventures strategy very unique. One is that we have a direct relationship with the foundation. Saylor, unfortunately doesn't have a relationship with Satoshi. We do. This was brought to market in partnership with the founders of Sui. We and Sui were the lead investors. We also locked our shares for 12 months to prove to the market that we're long-term focused and to the Sui community that we're long-term focused. Number two, we've also negotiated on behalf of our shareholders a specific discount to purchase Sui tokens from the Treasury. Now, Sui is not well known for having done any of these locked token sales that you see in Solana or in Avalanche and other kind of blockchain networks. We entered into that relationship and negotiated that on behalf of our investors because of our special relationship. And Caritage's relationship runs deep and wide with Sui. We were one of the first investors. We've invested in a number of their ecosystem projects, from Walrus to Deepbook to Double Up, and many others like SuiLend. And we have built a lot of mutual trust, and we're very, I think, kind of, respectful stewards of this company in the public market. So when it comes to running a strategy, there's two things to say. One, we have the relationship next to us as partners. Number two, this is an executive management team that will drive return on the balance sheet. That's our focus for shareholders, to increase Sui per share. And number three, we have Galaxy as an incredible asset manager next to us. So this is a very complete strategy. And I think it's something that's unique. I think this is probably the first foundation-backed strategy that really has 50-50 relationship with the founders of this blockchain. And they are our partner in this endeavor. We are segregated for disclosure purposes, obviously. But I think we have a really interesting commercial mandate in the capital markets to drive the Sui vision long-term, to raise capital in the market, to accumulate Sui, and to drive return for investors in the form of Sui per share. I think that whole relationship is totally unique in the market right now.
Yeah, I mean, I do think the relationships between foundation and treasury company is one that doesn't get discussed all too much, and some of the levers there and being aligned with a team like the ones at Miston is very intriguing in terms of kind of where that goes. And you don't need to convince us. At Coinage, by the way, we run a validator, one of the largest validators on Sui as well. And so our community often does stake with us as well. I don't know, potentially something to explore there as Mill City continues this. But I do think it is interesting to kind of look at kind of, again, the way that you guys acquire Sui in this and how these treasury companies communicate to the market. Kind of the same things that Saylor took, I guess, months, years even, to kind of start to get the market to understand, look, I'm not going to sell. I'm buying the top for forever. And, we're starting to see maybe some of the market discount other treasury companies in these ecosystems like Semler Scientific and how their kind of, premium has flipped and depreciated over time. Now, basically, I think I was seeing some close to maybe below even the Bitcoin that they hold. I mean, for you guys being a first mover advantage in the Sui ecosystem, are you expecting other ones like this to pop up? And when you look at kind of how you're acquiring Sui, I think based on the last press release, average price of the Sui you hold of around $3.63. I mean, what are kind of the messages that you're trying to send as you get this off the ground to the market, aside from locking up shares, that this is how Mill City is going to tackle building a Sui treasury the right way?
Yeah, great question. So the first thing is we have to tap the capital markets to raise money to accumulate Sui, and to do that in the most efficient way. We also are mandated to drive return on that balance sheet for our investors. And there are a number of ways in which you can drive return. You kind of alluded to them just now: staking rewards, validator rewards. I think in the medium term, once you've built a significant balance sheet, you can actually drive liquidity back into the Sui ecosystem. I think there are tons of opportunities to generate safe and compliant and risk-adjusted investor return in the ecosystem, and we really will strive to do that. I think, speaking about the DAT space as a whole, and just to kind of take a sidestep away from Mill City Ventures specifically, so as not to give any kind of forward guidance here, I think it's going to be very interesting how these DATs emerge long term in partnership with foundations. And I think that specific relationship, that unique relationship we have, how we capitalize on that in the next 10 years is going to be really interesting. And how other firms do that is going to be really interesting, because you could see a future where DATs acquire other businesses with cash flow, or with billions of users. One of the things that we have sketched from the very beginning in our investment thesis on Sui is that the future is based around AI, it's based around quantum, and it's based around new breakout use cases that have billions of users that have been prohibited in Web3 historically. Mm-hmm. Prohibited because of the scale that has not existed until Sui. Sui is a low latency, high throughput blockchain with very low cost and built for infinite parallelism. And it's also built on top of Move, the most secure and only purpose-built programming language for crypto in the world. So as we look into the future, I think there are going to be very interesting opportunities in the space where DATs could identify targets that are synergistic or complementary with the blockchain. In our particular business, Mill City Ventures, it's important to stress that there is an operating company there. Doug, the CEO, and Joe, the CFO, built a great business out of Minnesota. It's a non-bank financial lender, and we will still run that operating company. It's got a great loan book with great around average 24% returns on those loans in the past year. If you look in the future at SME credit, that's a very interesting area that's been largely untapped by DeFi. We could see many opportunities where that could be complementary with a blockchain stack. So I think, to kind of summarize, we are the executive management team. We have a great asset manager in Galaxy. We will drive return on our balance sheet for investors in the form of Sui per share. And that's what we're focused on, shareholder value.
I think one of these kind of trends now, specifically as we see it, is kind of trying to identify who these treasuries are working for. And I think it's a really interesting question, and maybe one that gets harder to answer when you're backed into a corner. Like, again, if you're seeing a premium flip to a discount and you're sitting there, and as I just discussed, kind of Tom Lee's ability to raise $1 billion and then use it to buy back stock, seems like it would be a move that would benefit kind of, shareholders over pushing or influencing the underlying price of the asset that they hold. And you guys having the relationship with the Miston team and the Sui Foundation is an interesting one to explore, because I guess, how do you break out as you're building something like this, who the real people you're operating for are? Is it more to kind of cover the Sui pieces you just kind of highlighted there and what might happen to price, or is it more around equity? And how do you balance that? It seems like it might be a tricky piece.
I think, Sui, as I mentioned, is the breakout star of this cycle. It's probably the category winner of the most recent cycle. We think it's going to be the category winner long term. That being said, not everyone has encountered Sui yet. It's still a young company. There are many investors in the crypto native community that own Bitcoin, but don't own Sui. And maybe they trade through their Robinhood account on the retail side. Maybe we are offering a really interesting gateway to get exposure to the SUI ecosystem. That's number one. Number two, for sophisticated investors, institutions who came into our pipe round, many of whom you saw on the press release, but also many that we couldn't display for privacy reasons, they're long-term focused, and they want a safe and compliant equity wrapper to access the explosive growth of this ecosystem. And I think, the big megatrend here that's taking place in 2025 is the explosion of latent demand for crypto equities, manifested most specifically in the Circle IPO and the run-up, but also now in this kind of emerging phenomenon of digital asset treasury companies. This is the tipping point. We've been building in this industry for many years, and with a favorable administration, an incredibly positive SEC, and all of the great news that you guys have kind of covered in the past couple of weeks, the time is now, and the demand is insatiable. So we are seeing institutions buying into SUI's vision in a safe, compliant, institutional grade wrapper through us. We're also seeing retail purchase SUI in their brokerage accounts through us. And what do we offer? We offer SUI, and we encourage people to go and buy SUI to get involved in the ecosystem. It's a thriving ecosystem with incredible businesses like Walrus for storage, Deepbook for liquidity, Seal for privacy that's coming. But ultimately, if you want amplified return on the SUI ecosystem, you want to back an active management team like us to deliver that. And that's what we're here for.
Well, I think it's interesting just to think about, again, this is all happening pre-potential ETFs that I know have been filed. We saw those announcements made at SUI Basecamp actually in real time from various ETF filers. And I just do think it is interesting to think about how much more opportunity could exist for an asset like SUI. I'm pretty sure, by the way, as I'm looking at it in real time right now, I don't even think you can buy it on Gemini. And I could be getting that wrong, but I'm pretty sure after I've checked on different platforms. And so it's there's still so much room to run for some of these assets, because you think about in last cycles, it might have been the premiums that were there for once you got listed on the Coinbase and you ran up. But for something as large as SUI, and I agree with you, obviously, again, like we said, we've been covering what the Miston team and co have been up to, and the SUI play coming out. I think there's a lot of excitement built up around the SUI ecosystem. So I think it's exciting, and obviously we're going to be watching for what you guys do over the coming weeks and how you kind of announce these. I guess last question for you, Stephen, on that front is if there is one way of how you guys want to be distinguished as different, aside from everything you said, in execution on the buy side, and again, no forward guidance here, but I do think it is interesting to kind of think about the actual price execution or how these DATs handle establishing their treasuries. Is there anything different that you'd highlight about kind of the way that you guys are looking to maybe handle that, announce it, get it out there, that might be Mill City versus all the rest of them?
Yeah, I think the first thing to say is that we are at the very beginning. The deal closed at the end of last week. And this is the start of this journey, and we're delighted to share it all with you. But I think for us, what makes Mill City Ventures totally unique is the extreme closeness with which we're operating with the SUI Foundation. They are great partners. The trust is bi-directional. We aspire to be great custodians of their brand in the public markets. And, our goal is to raise capital, tap the capital markets, accumulate SUI, both in the market and through, other kind of strategic means, such as the relationship with the Treasury that I talked about earlier, drive return on that balance sheet. And in time, I don't want to kind of give too much in the form of forward guidance here, but we will definitely be running a very dynamic strategy that will, I think, demarcate a clear line of differentiation around this team. We think that the future of crypto is going to be an industry based not on billions of dollars in stablecoins, but on trillions of dollars. It's going to be an industry based on billions of users, not millions of users. And the way we see it, there's one blockchain that's going to be at the center of that onboarding, and it's SUI. So for us, we are going to dovetail very nicely with the exponential rise of this ecosystem, the network effects that it's experiencing right now. And we are going to be the capital markets partner. And I think, over time, we hope to be very transparent with our disclosures to the market about how we purchase SUI and how we drive return on that balance sheet. But being, in lockstep with the foundation just gives us incredible velocity out of the gate. And we're here to drive long-term return. And this is a long-term partnership. It's not a short-term opportunistic trade. That's the difference.
Well, I mean, like I said, the attention and moves in this Sui ecosystem have been much larger this cycle, and clearly have captured the attention of crypto investors, but exciting to see it kind of spill over into the traditional world of investing right before, by the way, or potentially well ahead of a Sui ETF getting greenlit. So exciting to see it happen. Stephen Mackintosh, Mill City CIO, thank you so much for hopping on Coinage to chat with us today, man. Appreciate it.
Thanks so much for the support. Appreciate it.
Yeah, of course. We'll be watching. Very exciting to see all these things play out. And as Stephen was just talking about there, certainly there are developments happening in real time back here in the U.S. that is opening, I think, a lot of new potential when it comes to use cases for a performant blockchain like Sui. And one of those things is just the idea of tokenized assets trading on a blockchain and what that will look like, particularly when it comes to not just stablecoins, but equities as well. I want to highlight kind of what we heard just recently from SEC Chair Paul Atkins, who was speaking last week as we dive back into our run of show here. He was speaking last week about the idea of Project Crypto as the SEC announced it, and highlighted kind of what's to come in supporting President Trump's theory and hope and vision for creating the crypto capital of the world here in the United States. At that speech that we heard from Paul Atkins, he highlighted a lot of things that sound very similar from the way that even Coinbase has been talking about on-chain equities and on-chain securities and dual paths for projects like us here at Coinage that are exploring tokens that can trade that are not specifically in the securities camp. Just take a listen to what Chair Atkins said, and we'll chat about what that all means on the other side. Take a listen.
America must do more than just keep pace with the digital asset revolution. We must drive it. So today, I should like the world to go on notice that under my leadership, the SEC will not stand idly by and watch innovations develop overseas while our capital markets remain stagnant. To achieve President Trump's vision of making America the crypto capital of the world, the SEC must holistically consider the potential benefits and risks of moving our markets from an off-chain environment to an on-chain one. We're at the threshold of a new era in the history of our markets. As I mentioned earlier, today I'm announcing the launch of Project Crypto, a commission-wide initiative to modernize the securities rules and regulations to enable America's financial markets to move on-chain.
So, America's financial markets potentially moving on-chain. And again, that is in lockstep in tandem of stablecoins and what we heard from Treasury Secretary Scott Bessent talking about stablecoins and demand for dollars moving on-chain in the arena of trillions of dollars over the next couple of years. So when you piece it all together, look, you're hearing incredible bullishness from both the Treasury Secretary and now the head of the SEC moving in lockstep. The CFTC also announcing their own sprint to deliver on some of this as well. Keep in mind, all of that's happening as we are continuing to watch the Senate try and push through the Clarity Act after that already passed the House. So all of this is playing out, specifically, I think, still delivering on the idea of this year being the year in which crypto does graduate into powering what is an incredible size of the financial markets, all on chain. Still a lot of questions, obviously, about how that'll look, but nonetheless, the idea of all of these agencies and the heads of those agencies buying in the way that we just heard Paul Atkins talk about, I think was something that obviously got lost in the sauce when it comes to the moves in the markets off of Trump's tariffs last week, but we'd be remiss if we didn't highlight it and kind of talk about what that means. I also kind of want to pair it with what we're seeing play out in one of those spaces that has, one that we've definitely talked about here on Coinage before, but one that is heating up as we see the way that all of these things are being built out on-chain, including the likes of Zora. I want to bring up that chart because creator coins are back in the vernacular, shall we say, of what's been playing out. And this is the chart over here on Zora, as we see a huge spike in creator coins being issued. And we opened a little bit with what we were just showing from Chair Atkins there, because there's maybe a good chance to be made, more good case to be made, that maybe some of these experimentations in coins tied to creators might not have launched if you still had the Gary Gensler regulatory regime basically suing everybody who tried to issue any token, and certainly one that was more targeted to a retail audience like creator coins are at Zora. If you're new to these are coins that are spun up by creators posting wherever they may be. You can post on Zora, you can post on Base, creator coins being spun up and tied to how posts do. And so a very interesting dynamic, one that I hope we'll be able to chat with Dee, one of the co-founders over at Zora, later on this week. But specifically, I think it's quite interesting to see how it's been fueling a rise in what we've seen play out on Base, because of course that's kind of where this is all playing out, is on Base. This little contingent of Base aligned companies, whether it be Zora or Farcaster or the actual Base app where you can post and be rewarded. And so all of these narratives are somewhat coming together now. And I just want to highlight maybe what that looks like on a chart, because this is something that you might not be able to understand unless you see it on a chart. And for whatever reason right now, I can't bring this chart up. Let me try this again here. Because the reason that matters is, of course, Zora's price, as you just saw recently there, is pumping. And it's pumping real good. And I just want to bring up what the chart looks like on Dune. Because as we see more creators jump into this, and perhaps, by the way, throw a like or a comment on here, and you let us know if we think that Coinage should be one of those launching our own creator coins as well. If you didn't watch our episode kind of digging into meme coins versus creator coins, you'll know that they're very similar. But this is the end result of the wave catching on. This is the activity on chain, according to this Dune chart here, digging into what we're seeing out of Zora's push to bring creators to launch their own creator coins. Look at that chart and look at that surge in creators waking up and saying, maybe I should start to launch my own creator coin here, or potentially maybe I should refer people to this platform. What I think will be interesting to keep an eye on is the same kind of fall off that we see with meme coins. After a while, there's not so much huge swings to the upside. There's not as much excitement. And I think it is interesting the way that Zora's designed this in a way that the tokens for a creator coin, after you launch them, they're unlocked after a certain period of time, depending on posting. Over 5 years is how they're unlocked for creators. And so I think that that's kind of an interesting kind of piece to the pie here as people think about those things. And it's one that we're thinking about ourselves here at Coinage, as we have spun up not our own creator coin yet. No coin yet. But all of that could very soon well change, potentially today. I'm not making an announcement here, but keep an eye on our page as we look to explore not just the creator coins that are offered on Zora, but I think, as we have been doing, creating and posting some of our best IP that if you are a Coinage member and you've bought a Coinage NFT, you own along with us. And of course, this will be distinct from maybe some of the other creator coin experimentations out there, because just as we did with our other meme coin that we once launched, all of those will be owned by the Coinage DAO, as Coinage's DAO owns all the IP here. So I think this would be an interesting experiment just to see. If we've done it with others in the past, at least we should give it a good go and reveal the curtain, pull back the curtain on how this could go for Coinage. And so, we were sitting on a bunch of IP, including that Doquan interview from 3 years ago to this month when we launched that back in August 2022. Perhaps we start with that and we see how it all goes. But keep your eyes on the Coinage page over on Zora as we experiment along with so many others. As you saw in that chart, a lot of people coming up on that trend. It's one that we've got our eyes on, and of course, it's one that we've got our headlines tapered to as well. If you want to check out all the headlines around the world of Web3, you can always head to coinage.media to check those out and co-own this project with us and everything that we launch here at Coinage as well. For Texas over here on the buttons after our computer crapped out this morning, and for Steven who jumped on to talk about the new sweet Treasury play, I'm Zach Guzman. Can't thank you guys enough for tuning in. As always, we'll see you again soon